Recovery. Now, we brought together two authorities on risk, security, and the Middle East. My guests are Ari Bergman. He is the managing director, Penso Advisors. He is an expert on risk and advises clients on global volatility. We also have Ilan Berman. He is the vice president of the American Foreign Policy Council. He's an expert on security issues in the Middle East and elsewhere. He's also consulted for the CIA and the Pentagon. Gentlemen, good to have you with us. Ilan, let me begin by putting to you the notion that these confrontations that exist in Egypt, are they more about the economics of the situation, or does it really have to do with politics? Because it seems as though when you look at the economy, you've got a lot of very poor people.
No, I think that's right. And if you look at the economic indicators, the poverty in Egypt is just staggering. It's a country of 80 million people. A fifth of those people live at under $1 a day. So this is a desperately poor country. It's a country that is chafing under the fact that the Mubarak regime for the last 30 years has really not done much by way of promoting economic prosperity. If you look at sort of all of the economic indicators in terms of property ownership, in terms of employment and unemployment, what you see is a sort of a chronic failure of the Egyptian government to really provide for the people, to create jobs, to create the sort of sustainable economic environment that's necessary for Egyptians to look positively at the future. So a great deal of this is tied to the inability of the regime to enter the world economy in a constructive way.
Ari, come in on this topic, but add the element of risk and how to quantify it, because it seems as though with these events beginning in Tunisia, the fall of the government there, you have a new government being formed in Jordan, and you have the continued uprisings in Egypt. There doesn't seem to be a lot of concern, at least voiced in terms of buying and selling in world markets. Is that about to change?
I think there's a lot of complacency out there. And if we look at what's the common denominator of all of this, and I think Ilan is right, it's economic, but right now, I think it has to do a lot with the prices of commodities. Commodities have been going much higher because there's an imbalance. The U.S. has very easy monetary policy, because we are facing deflation, while in emerging markets there is a high inflation, and food is a great component. So this is a systemic issue that's not going to die. Egypt is one thing, but it could spread. And the complacency is that we have to be very careful. We don't know the outcome. And the markets feel good. The markets are going higher, but the imbalance is there and is only getting worse.
So, Ari, does this mean that from an investor's point of view, buy commodities? Because we heard earlier this week, for example, Morocco removing any of the import tariffs on durum wheat. We know that Egypt is one of the largest importers of wheat. They have subsidized bread prices on many levels of the economy. So does this mean that investors, if they want to get on the right side of this, buy commodities?
Commodities are great, but they are in the bubble. There is a risk that all of this imbalance will force the countries to tighten and to basically kill this bubble. We have China growing very fast. Everybody is buying commodities. If you buy commodities now, it's good, but it might be a little too late. You got to be careful that all of these imbalances will force commodities to go down. And that's through monetary policy, tightenings all over the world, a slowdown in the economy, the reversion of this imbalance, and commodities actually might get hurt in this business.
Why would they get hurt? Because of this bubble notion?
Because this bubble is becoming unsustainable. And people are going to realize the higher they go, the more problems we'll have. It's in the Middle East, it could go to Asia, it could go to Latin America. Who knows where the end is?
Ilan, is it possible that you get to a point where a commodity, for example, oil, just gets to be so expensive that you do without?
Well, I think what you're looking at is the Middle East. Part of the political volatility, and the reason the Middle East is in the headline so much is because the volatility of the political scene adds that geopolitical risk premium to world oil supply in a very unconstructive way. The previous guest before the break, Hala Esfandiari, talked about Iran, and it's useful to mention that there was a huge economic dimension to the Iranian Revolution of 1979 in terms of fluctuations in oil markets, fluctuation in global prices. So you can be sure that not only only businesses, not only hedge funds, but also governments, including our government, are looking very carefully at what's happening in Egypt and whether there is a contagion effect, that this sort of instability will spread to Yemen, to Jordan, to Algeria, and what impact it may have on not only global oil trade, global oil traffic, but also global oil prices.
All right, we've got more with Ilan Berman, more with Ari Bergman on the crisis in Egypt ahead. We're also going to be talking about Egypt. My guests are Ari Bergman, Managing Director, Penso Advisors, an expert on risk. He also advises clients on global volatility. We also have Ilan Berman. He is a Vice President of the American Foreign Policy Council, an expert on security issues in the Middle East and elsewhere. He's also consulted for the Central Intelligence Agency as well as the U.S. Pentagon. Ari, talk a little bit about U.S. interest rates. We were talking during the break about how no one is expecting the Federal Reserve to raise interest rates now. Weakness in the U.S. economy. Ben Bernanke speaking today in Washington, D.C., talking about the jobs market. That's a challenge. But you say pay attention. When people are least expecting it, it's possible, just possible, that we could get a rise in U.S. interest rates as a response to political unrest in places like Egypt. Why?
Yes, I think that the unknown here and what is the real risk is something that you're not focused, and that's monetary policy. Monetary policy has been very loose in the U.S. We are facing deflation, unemployment. The world is facing the opposite. High inflation, commodities prices rising, hot economies, huge imbalance in the world. And that creates political instability. Political instability is being fomented, is being created by economic instability, by economic differences. What happens if this thing starts spreading all over and the political entities of all the countries in the US, that's enough. This easy money, it's killing us. And the political environment will force the Fed to tighten, perhaps 100 basis points. 100 basis points, in the big scheme, it's not a lot, but the market is not expecting. The surprise or the problems that this will cause are really great. And that's the real risk in the market. What you least expect is what comes to bite you. And you have to protect before it comes, because after it comes, it's just too late.
Ilan, speak about the issue of